Okay, good morning, guys. So, like I promised us, we'll talk about how to spot your high probability setups, like your A setup, your whatever setup. Let's talk about it now, yeah? So, I've told us about your structure, which is your impulsive cell. I'll give you your first breakup structure here, inducement, second breakup structure. Now, I've talked about your point of entry, which is your other block or your fair value gap. So let's talk about what validates these zones, like what validates these zones and how to get an A plus setup. Someone asked me in the comment section last time how to get a good A plus setup. It's basically just a combination of almost everything. The combination of your structure. By structure, I mean your impulsive push, your BOS1, your inducement, BOS2. Then your either fair value gap or your other block as point of entry. So let's see now your A plus setup now should have your two breakups. So on your checklist now, your A setup, your A setup should have one. Trend should be valid. By trend I mean both your structure mapping should be valid structure mapping. By which I mean your BOS1, BOS2, your BOS1, ITM, then BOS2. Once you've seen these two, then as for your point of entry, that's your point of entry now, should have either of the other block and sorry, LVG, G should be there, and your OB, other block. I think so, yes. Or not, I know so rather. So this is what causes, or this is what confirms your high probability setup. What do I mean? You need to see, sorry, you need to see this correction. This one gives you your first breakup structure. Yeah, your first push, your first breakup structure, which is your B1. Your B1 should be there. Then it comes down, gives you your B2. And before your B2, the origin of the B2 should give you your inducement IDM. So once the first one is complete, I wish your valid structure. Your BOS1 here, your inducement here, BOS2 here. Then if you X-ray the origin where the market come from here now, you should see your both FVG and OB. For OB, I mean your other block. So once you see these things happening together, they are not just random. Market makers know what they're doing. So once you can see everything here, everything, not some. Once you see everything here, that is your ideal A setup. Setups that hardly fail according to studies and everything. So once you see this stuff, you place your entry here and this wait market push on this down now to target that previous highs. So this is what makes your ideal A setup. Everything I've been showing us from the very beginning, I don't trade anyhow. I trade just clear structures. If you look at this place properly now, yeah, we had these cells before. I told us it should be impulsive push. It caused your first breakup structure. That's your B1, B1 here. After the B1 happened, what can you see again? Market came inside, went up, gave you the B2, B2. Like watch the videos over and over again. Then before your B2, you have your inducement IDMX, IDMX. You get. Then X-ray the origin. Now, if you check here now, you can see your valid impulsive push, man. It broke structure too. Then what was it called? You can see a nice fair value gap here. You can see your order block here. So this is what you call your A setup. So now your anticipate price comes back to either this extreme block here or your what's it called? Your fair value gap and moves. So once you see these criteria being met on one particular trade, that is all you need. Valid structure. That's your first breakup structure, second breakup structure, plus inducement. The three must be complete. If they are not there, it's not an A setup. It's not an A setup. So you need to see one is impulsive push that gave you your first breakup structure, your correction that gave you your inducement, and the correction in inducement that gave you your second breakup structure. Then you need to see both an FVG and an OB at the extreme. So you anticipate price comes back here and continue. So that's your ideal A plus setup. So go through the video, look for some examples on your chart and engage. So on the next video, I'll do more examples on this stuff. I'll do more examples on it. But if you check here, the same thing, you can see your impulsive push. Yeah? See your first impulsive push here, impulsive push. First breakup structure, B1, B1, corrected. Correction leg give us IDMX, IDM, which is our inducement X. Then that one now gave us our B2, second breakup structure, B2 happened here, B2. So you see impulsive push, B1, correction inducement before B2. Look at this origin now. What can you see? You can see a last candle here, last red candle, last red candle before this impulsive green. So you have another block and a fair value gap. What do? You mark the both places and extend to the future. That is it. And use just the other block or the both efficiency. That is your A plus setup, right? That is your A plus. And you can see market will always come for this extreme before anything. Before price will do anything, market will come back to that place. And you can see that's the push. That's it. The same thing happened here again on the point of entry. What do I mean? Impulsive buys give us our first B1 here. That's B1 corrected, giving us IDM. IDM here. And IDM now gave us our B2. B2. Then check if you check here now, these candles were impulsive. Then check now, we have a fair value gap here. Candle 1, candle 2, candle 3. I told us the gap between candle A head and candle B low. That's your fair value gap. So what do? You mark the whole stuff now as your point of entry. That's it. You get. So your A plus setup always move from an order block as your first point of entry. Then use a fair value gap for the continuation. I'll say that again. Your A plus setups, yeah, will move originally from another block. If you can see here now, price move from this other block. Then after we had another breakup structure here. Another breakup structure, you notice here now, we had this candle 1, candle 2, candle 3. Price comes back for an F for a fair value gap for continuation. So price does just two things. Other block, first entry, FVG, second entry. We check here again. It's another block. Check here again. This is an FVG entry. It's an FVG entry. So once you've seen your structure mapping and see created this nice fair value gap, price came back and boom, TP. Here again, impulsive push, FVG, TP. So this is your ideal A setup. What do I mean by A setup? Or those setups that gives you money, like mad money in the market. You need to see your both stops, your breakup structure 1, breakup structure 2, plus your notice move. Then at the point of entry, you need to see your both fair value gap and that block together. Once you've seen it, put your limit and that's it. Okay, so I think that will be all. Next video, I'll talk about how to pair time frames and how to confirm or your lower time frame stuff. Then I'll talk about the time frames we use and the time frame combination. All right, guys, stay put. So watch the videos and apply it. Like watch the video over and over again and apply it. I told us already. Your A setups, other block will move the first entry. FVG will do continuation. Other block, first entry, FVG continuation. Like look at your charts. Back test, you see it there. All right, guys, take care. Take care. The next video.